You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to watching the Financial Survival Network. I'm Kerry Lutz. Well, hey, I'm sitting down here with David Erfle. Just 3 months ago, we were very sanguine and looking forward to a new super cycle in commodities and metal prices going up. Gold had hit 2,000. Everything was peachy. Everything was great. Fast forward 90 days, and it looks like the powers that be are intent on throwing a depression, and all of you are invited. Right, David?
Exactly.
Hey, if you got a question.
That's exactly right.
Yeah, if you got a question for David, just shoot me an email, or for me, for that matter, kl@kerrylutz.com. So imagine if they threw a depression, David, and nobody showed up.
Yeah, that would be something, wouldn't it? But unfortunately, we're all here, and we all have to be here, and we all have to deal with the Federal Reserve stumbling along to try to fix what they created in the first place. And a visibly shaken and frustrated Jerome Powell in front of at a press conference after they raised 75 basis points. I mean, the market was expecting 50 basis points up until the day before the FOMC meeting, and then all of a sudden it was pricing in a 75 basis point cut, and then Jerome Powell in the press conference was deflecting all these questions about, hey, are you trying to create a recession? He said flat out that he's not trying to create a recession, and then he comes into Congress this week basically stating that he's willing to give up in some employment jobs to get down inflation. And he continued to say there's going to be some pain, but it's all the pain that we're experiencing was caused by the Federal Reserve in the first place, with a big assist from Congress and all the money they've created to put into the system. And everybody now is wondering when or if the Fed is going to pivot. Because, hey, we're talking about an election year here. So how much pain can the Federal Reserve inflict on everybody before, the powers that be that are trying to remain in office are thinking, hey, maybe a little inflation is not so bad when it looks like we might lose our jobs in November.
Yeah, well, the first order of business for Congress is to get reelected. Nothing else. Everything else pales in comparison. I should mention,
right, deflect blame, never take responsibility, and get reelected.
I should mention we're talking on together on Thursday, June 23rd, just so you know the recency of events. So, look, it seems to me like Powell is like that beat up professional poker player who's been on a bad run of luck, and he's only got so much left in his bankroll, and he's making moves that are a bit reckless, trying to win it all back. And in the final analysis, desperate people do desperate things.
Yeah, I mean, we're pretty much, expected to believe that the institution that created this problem can get us out of it. I mean, basically stating that inflation was transitory for months, and then backpedaling and saying, hey, wait a minute, it's not so transitory. And now they're saying it could even go higher. But hey, we could still create a soft landing here, and we don't think there's going to be a recession. Well, I'm sorry, but they're obviously creating demand destruction here, and everything that all these gains that people have in the stock market, they're starting to take them rapidly, and they're turning to losses in many cases. And like I said before in a previous interview, the margin clerk is a lot stronger than whatever a central bank has to say or tries to do. And the deleveraging process is continuing here. Sure, we've got a very oversold stock market that's in the process of a bear market rally and a dead cat bounce. But if you're leveraged and especially if you're over leveraged, it's not a very good feeling right now. And especially in our little sector, our tiny little gold sector, which is so small, but it's amazing how it pretty much is the barometer for the marketplace. The gold stock started to sell off in 2008 before the stock market did, and the gold was going towards $1,000 an ounce. Everything was great, and all of a sudden the gold stock started flashing a warning. Hey, danger, Will Robinson, there's something wrong here. And that $1,000 level proved to be strong resistance. And once it finally did get over 1,000, it ran to nearly 2,000 the next few years. But I digress. As far as the gold stocks are concerned, they're a great barometer for what happens in the marketplace. And they did the same thing again this time. They're especially the juniors. They kept looking really, really weak. Something's wrong here. The gold price is remaining, around $1,850, and the gold price has pretty much done its job. It's held its value while everything around it is tanking. But gold stocks are stocks, and while the gold price fluctuates between $1,800 and $2,000, inflation, cost creep in everything to dig it out of the ground, to build the projects, to explore for it, keeps going higher. So investors are like, why do I want to own gold stocks? So it's a great time to have a lot of cash. I've been saying that for the past few months, and I'm glad I built up a large cash position. And even though the cash is being inflated away at let's be honest here, the inflation rate is not 8.6%. It's really about 16%. If you take a look at
least
John Williams' shadow stats, how they calculate inflation. If they calculated inflation now like they calculated it back in the early 80s, then it would be about 16%. But still, your stock prices are eroding a lot faster than the inflation is eating up your cash. So as an investor, cash is not trash right now. It's a great place to be.
Cash is trash, but except when compared with all your other options, right?
Exactly. Right.
Yeah. So, but eventually this is gonna end. If you remember back in 08 and 09, man, the sector popped back with a vengeance.
Oh, with a vengeance. Yeah. I mean, the worse these bear markets get in stocks, the better it is for gold stocks eventually. But you feel a lot more pain in gold stocks while it's happening. And these stocks get down to ridiculously low levels. And the gold price always bounces back and goes a lot. It's funny. It goes a lot lower than people expect during these things. And then it goes a lot higher than people expect once we come out of it. Because let's face it, the Fed is going to have to pivot at some point.
Oh, there's not even a question.
They're talking about raising the Fed funds rate past 3%. I don't see even how that's possible. I mean,
it's hard
not
enough
during a sovereign debt crisis. No way.
It's hard enough for them to raise it 100 basis points. Let's face it.
Right.
We could see them backing off very quickly. There's even a quote of Jerome Powell saying that he's raising rates so that he can cut them later.
Yeah, I mean that's their modus operandi, isn't it? We have to accept the pain now and get the federal funds rate up to a certain point where we have room to cut it and create more money again. To try to inflate us out of this problem again. But there's only so much road that can be kicked. Because now with global debt over 300 trillion, people are starting to begin to realize, hey, these. And governments understand this, that there's no intention and there's no way to ever pay any of this debt off. They have to inflate it away.
Yeah. Well, or cut off a zero.
Exactly.
Yeah,
you're talking. Yeah, we turn into Hugo Chavez and we just start cutting off zeros, right?
Well, first you add them and then you cut them off, right? But you're in the same place, right? I mean,
right.
There has to be a jubilee or
And all the
dropped.
while, it's bubbling in the background that they're creating these central bank digital currencies. It
Well,
keeps
that's
coming up
secure.
in these conferences and these talks and China's already got theirs. They're already using it in certain cities, and they used it at the Beijing Olympics. So
Nobody likes it.
that's the modus operandi is to get everything digital, and then they really got us when they can
Yeah.
exactly where every single penny goes.
Yeah. Hey, man. Well, I've created this thing called a digital mattress. And so you sleep on your digital mattress, and all your digital assets are stuffed inside of it, right? No one will ever know.
Yeah, the iMattress instead of the iCloud, right?
Yeah, exactly. Now we're talking. I think we're onto something here, David.
Yeah, exactly.
Digital mattresses for the masses.
Right.
And
I
just
mean,
think,
as far as I'm concerned, I think that's why that they let the crypto craze run as far as they did.
yes,
Get people used to these digital currencies. Have them go crazy with digital. And now it's coming home to roost that they're just speculations like anything else. They're not backed by anything, and they're just digital ones and zeros. And all of a sudden, your Bitcoin, which hit what 69,000
yeah,
just
60,
last year,
yeah,
has lost
67, 7.
70%,
Yeah,
and it's now back testing that really critical 20,000 level. I mean, it got down to 17,600, I think, the other day, and now it's
yeah,
testing
that's right. It
20,000.
broke.
And I wouldn't be surprised to see it going down to 12, 14,000 here pretty quick. Once you see the next leg down in the stock market, which is eventually coming after this bear market rally
Yeah.
peters out.
And it broke its peak in December 2017 when it went under 18,000 there.
Right.
Nobody's talking about, but here, like, I'm not the best technical analyst here. I don't pretend. I don't do it a lot constantly throughout the day, which you have to do in order to be good at it. But if even I can see it with my untrained eye, why isn't anybody talking about this stuff? That's a 5-year high that it broke, and after it hit that high in December, it crashed.
Right.
You know?
I mean, what, during the 15th, 16th century, one tulip bulb could buy you a house. So,
Hey.
just a few Bitcoins could buy you a house at this point.
Right. Well, hey, I thank you for promoting my new coin called Tulip Coin. It's actually the Tulip Ponzi coin, and you just keep.
Right.
The more you stack them, the more they become worth until they're worth nothing one day.
Yeah. I mean, what? I mean, 2 trillion of value's has evaporated. 2 trillion. That's more. I think that's like double what the subprime mortgage crisis cost.
Right.
I think that was a little over $1 trillion.
And there's leverage up the wazoo for that thing. My friend Nick Santiago thinks 14,000 Bitcoin. I think it could break 10. If it breaks 10, but I think in the long run of all the cryptocurrencies, Bitcoin is the one, because like beachfront realty, they're just not making any more Bitcoin. Now,
Right.
Whether anybody wants it or not,
Yep.
that's the confidence factor. And never forget the root of confidence is con.
Right. And looking back, Bitcoin is basically the poster child for risk. And if you take a look at its chart, and you take a look at the NASDAQ chart, the S&P chart, Dow chart, Bitcoin, they all have head and shoulders tops that they're breaking down from.
So true. And they were triple tops, double, I would argue, triple top in Bitcoin, reverse head and shoulders patterns. From October 17th to November 16th and 15th, around there. I can't quite figure it out. I can't see it.
Yeah, and they all back tested their necklines here.
Yeah,
a few weeks
all
ago.
back tested,
Started plunging,
and it went higher. The first time it tested it, it went above. It set a new record, and then it went below, and it was all down from there. And it was so predictable. I called it then. Me and Nick called the peak, but we don't know. You know what the problem is, David? We don't understand cryptos.
No, we don't.
This time is different. This is a new economy,
Yes.
New world. This time is different. Right?
The most dangerous words in the English language. This time is different.
Yeah. So, hey, look, you got to publish a newsletter. You got to keep putting out content. And at some point, everything, every dog has its day, right?
Don't just survive, thrive. The Financial Survival Network.
Osino Resources is a Ross Beatty-backed gold exploration company in mining-friendly Namibia. Osino's district-scale land package is situated near 2 producing gold mines, one of which Osino's management team previously developed and sold to B2 Gold. Osino's founders and management are experienced mining professionals who have already successfully developed and sold 2 companies in the past 7 years. Osino has a tight share structure, and with its current treasury, it can self-fund the advancement of its gold discovery into at least 2022. This is an exploration company with drills turning that you'll definitely want to pay attention to. Osino trades in New York under the ticker OSIIF and in Toronto under the ticker OSI. To learn more, go to osinoresources.com. That's osinoresources.com.
This is the Financial Survival Network. The information you need to thrive now more than ever.
Absolutely. I'm working harder now, keeping my, subscribers informed, even though it's not a great time to be buying juniors. We got to set up everything for what's coming, because what's coming is going to be a huge rally. It happens every single time in the sector. I've been through so many of these things. A great example is 2008. 2008 was a nightmare for everybody. And I was living in Buenos Aires at the time. And, I was traveling around in Buenos Aires, traveling around to Argentina. And in 2008, the gold stocks bottomed in September to October 2008. And I was lucky. I had a bunch of cash and I started buying stocks then. And then in March of 2009, that's when the S&P hit 666 in March of 2009.
I remember.
Right? And my gold stocks had already done quite well. Gold stocks bottomed 6 months before the stock market. And I was in Ushuaia in March of 2009. And that's the southernmost city in the world, right? It's at the bottom of South America. And the port there in Ushuaia is huge, and very active, right? Because, it's a very active port.
It's a gateway.
And the day I was there, I was on a hill and I was looking down on the port. There was not one ship in the harbor, and just containers were just stacked up on the docks. It was the most incredible thing I'd ever seen. And I said, well, if this isn't a bottom, I've never seen one. And so I just started buying more gold stocks. Of course, I should have bought more equities too. But
Right.
Junior gold stocks is what I know and what I love. So they were ridiculously undervalued then, and even though they're ridiculously undervalued now, they could get even more ridiculously undervalued if you see more deleveraging, another deleverage move down in the stock market, because everything gets sold when that happens. Values don't mean anything. Fundamentals don't mean anything. The only thing that means something is the cash that you can acquire and the leverage that you can get rid of at that time. It's deleveraging and it's margin calls and it's the winners are the ones that lose the least. Everybody loses in a bear market. It's the winners that lose the least.
Howard Katz used to write a newsletter, passed away 10 years ago or so, or somewhere around there. And it was called the One-Armed Economist. And that's what he said. The key in a bear market is just to stay even.
Right. Yeah. It was my friend and mentor, Richard Russell, who coined that phrase. Everybody loses money in bear markets, but it's the winners that lose the least. And that's absolutely true. And I've experienced it several times. And the best thing to do is, well, especially in the junior sector, you just don't trade on margin, period. These things are leveraged enough where you don't need to.
I've learned that lesson.
You always have a lot of cash during these things, and you just build up as much cash as you possibly can. You can make level-headed decisions. And then while everybody is selling everything in a panic, you've got all this cash sitting there, and you can make these rational decisions and take a look at these things and say, oh, look at this stock. It's de-risking this fantastic project in a great jurisdiction, and they're trading at cash. This is what happens at the bottom of
nets. Hey, The call is going to come from the White House to the Fed. Whoever is running things, we can speculate on that. But the call is going to be made at some point.
You would think it's sometime before September, right? Elections in November.
I think that's written off. I think it's baked in the cake. But then the next presidential election is only 2 years off. And if they started pumping money in, let's say January, you're not going to feel the effects for 18 months, right? Give or take.
Right. Yeah.
So after the midterms, maybe before the midterms, doesn't matter. Point is, the Federal Reserve originally was there as a backup lender of last resort to banks. That was its purpose. That's why the banks created it, so they'd never have another 1903.
Right. They wouldn't have to be bailed out by someone like J.P. Morgan.
Right. Exactly. And he got a lot of heat from it. His efforts to save the country's financial system were not appreciated. He was pilloried in Congress during his testimony. It's like, what do I need this for? So he died shortly thereafter. The Federal Reserve was set up, and hey, love it or hate it, it more or less worked. But then they said, well, you also got to keep prices stable. Oh, okay, well, maybe.
While destroying 98% of the currency since being
right. And then it was, you got to keep employment stable. And now the third leg of this untenable stool is you have to keep stock prices going up permanently, right?
That bubble inflated.
Yeah. So 3 conflicting goals or purposes for them under the best of circumstances, but 3 like wobbly legs on the stool that are going to cause it to collapse. And, we're going to have chaos no matter what. Let's just bring it on and get rid of it now.
Yeah, I couldn't have said it better. I mean, that's obviously, in hindsight, they should have been raising these rates a long time ago. But, carting out the transitory, the political party line, it's transitory.
Cover.
Keep buying stocks.
Cover story. All they had to do was 25 basis points a month and just keep doing that. The market would expect it. The market was going to go down no matter what. You couldn't keep it going up forever because that just
stop inflating your balance sheet to $9 trillion.
Right. And we're students of the market. There's no such thing as a market that goes up forever, other than for
unfettered capitalism is an oxymoron. I mean, it's all about boom and bust. I mean, it's inevitable. You can't delay the bust.
Yeah, we just have to go back to Thomas McKay's, popular delusions and the madness of crowds. But the difference was they didn't have a central bank to inflate everything at once, multiple bubbles. Back then, you only had one bubble at a time, and that's all the brain power of medieval man could take.
Right.
Now,
you had a currency backed by something tangible.
Yeah, like tulips. Right. Hey, you could say what you want about tulip bulbs, but they are tangible.
That's right. Oh, and there's one other thing I wanted to bring up. I'm sorry, it's off topic what we're talking about now, but gold stocks. It's funny. Bob Moriarty brought this up, and I didn't realize it until he brought it up. But he's right. I mean, they tend to bottom every 7 years. They have this washout decline.
Yes.
2001, 2008, 2015, and now it's 2022.
Yeah. Cycles.
It's amazing.
Never, ever discount them. And what's interesting? The market might have bottomed because there was a summer solstice 2 days ago and we had a rally. And, I hate to go back to animal spirits because
I know full moon and all that. It's like, it's a full moon. So, the market's probably going to have a big move up or whatever. Yeah, I know. But it's funny how some of these things, they kind of line up and they do happen. I mean, let's face it, the stock market is ridiculously oversold. So, it's due for a bear market rally. But, once this bear market rally is completed, if they haven't even talked about, pivoting, or if they keep their foot heavily on the rate hike gas pedal, then, it's going to roll over again.
Yeah. Hey, 40-year inflationary cycle. Last one ended right around 82, was it, I think, when Volcker was there? 40 years before
Raised it to 20%. Raised the Fed funds rate to 20%.
40 years before that, 1940, 42, World War II is highly inflationary, which is why they had to ration everything.
Right, and that's similar to where the situation we're at now, because back then debt to GDP was about as high as it is now, around 125, 130%. But when Volcker raised rates to 20%, debt to GDP was only 35%, and our national debt was less than $1 trillion. Now it's over 30 trillion. And if you get, once the Fed funds rate gets to 2%, just the interest is going to be $1 trillion. I mean, 70% of the accumulated national debt is accumulative interest already.
Well, the key for the government here to get out of this mess is just to sell California. It owns close to half of your state. Everyone at one point, everybody wanted to be there at one point. It'll bail out the state of California because all that potential taxable income. Yes, there are places you don't want to develop for sure, but there's no reason for the U.S. government to own all these Western states. It's been a debate since I've been alive and before that. So sell California, pay off the debt, right?
Yeah,
sell it to China.
California is the 7th largest economy if it was its own country.
Yeah, hard to believe. Well, pretty soon Florida at this rate will displace it, but we'll save that debate for another day. Make sure you go over to Junior Miner Junkie, that's JUNKY.com. Sign up for David's service because the bargains are going to be aplenty soon if they're not already there and we haven't already hit bottom, which we can't really tell yet at this point, but keep your eyes open because like you say, David, it's going to be the first sector to turn around, no doubt.
Absolutely. Yes. And thanks again for having me on. It's always great to talk to you, and be safe and sound out there and make wise, thought out decisions and try to stay unemotional about your trading.
We'll try. Hey, if you've got a question for David, again, shoot me an email, kl@kerrylutz.com. Make sure you sign up for your free newsletter, financialsurvivalnetwork.com. David, thanks for being on. We'll talk to you again soon.
Thank you.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.